Palantir reported their earnings after the market closed on Monday, and when we take a look, just yesterday they are up around 10% on the reaction of that, and this is an incredibly strong company to consider in your portfolio if you are looking one that has extreme growth. Now, when we take a look at the high level of their report, we can see one of the major reasons the market loved it. Well, they did in fact increase their forecast on the revenue, and they believe a lot of this is in relation to the AI strength that they do see the boom continuing to drive their top line over the last few quarters. We can see they've also increased their guidance 2.74 to 2.75 billion, and it was expected around 2.69, so that is a nice increase that the market wasn't anticipating. And we're going to take a look at how exactly their report was. So let's jump into their quarter 2 business update, and the first thing we want to point out, there are a lot of highlights. We're going to go into detail in each and every one of these, but at a very high level review, their commercial revenue is up 55% year on year. Their government revenue still growing, up 24%. And as always, you know we love to look at that free cash flows, continuing to show some very strong numbers quarter on quarter. So let's dive into it. First thing we want to talk about are the levels of the increase. Now, firstly, we have commercial revenue, as we just mentioned. We also note it is up around 6% on a quarter by quarter basis. Commercial customer count as well, that is the number of customers they are having, continuing to increase, something that we do expect to help drive that revenue. So the more customers they have, the much better we will see that growth being driven. We also note the number of commercial deals that have been closed has nearly doubled from the same quarter last year. Excellent to note. And the actual value of these contracts, because it's all well and good getting more contracts, but if they aren't of a higher amount, then it won't help continue to drive that growth at the double-digit rate we've seen. 262 million, and we can see that is more than double the contract value that we saw from the same quarter last year, up 152%. We then want to point out one thing that whilst maybe we've spoken about it before, we are now seeing it being continued, and as always on this channel, we love to see consistency. So this is now the 7th consecutive quarter that we can see that they have achieved GAAP profitability. Always love to see that, especially consistency. If you're a regular viewer, you know that is one of the key points we look for in these metrics. And they've also reached GAAP operating profitability for the 6th consecutive quarter. These are very important, especially when we are looking at a company that is growing at a very rapid rate. Then when we look at just global commercial revenue growth, up 33%. When we look at US Pacific, up 55% from the same quarter last year. These are some very impressive numbers, double digits. A lot of investors were worried that there would be a potential slowdown, and we can see again with government revenue that is up 23% and 24% US Pacific. We then want to also point out when you look at it from a total revenue year on year, up 27%. When we look at it from a quarter on quarter basis, that is up around 7%. So very nice to note. And on top of that, do remember they have increased their guidance for the full year revenue. We then take a look at their operating income as well as their margins, and as always we want high quality companies increasing revenue and increasing their margins. We're seeing that very clearly here on a quarter by quarter basis. In fact, quarter 2 2023, so the same quarter last year, 25% on the operating margin. A year later, 37%, so that is very, very impressive, whilst also increasing the operating income as well as their top line revenue. We then talk about the customer account, so the number of customers they have, again, increasing. We have 41% on a year-on-year basis, and when we look specifically at commercial customers, up 55%. We then want to point out that in terms of the number of deals, remember it's not just the number but also the value. They had 33 of which were at least 5 million, and they had 27 of which were at least $10 million. So very impressive. Remember when we looked at it on a numerical basis, that is more than double, so always a great sign. And then we want to take a look at their cash from operations, the free cash flows, always incredibly important. Cash from operations not only increased from 90 to 144, but also a 17 to 21% margin. And the free cash flow, again, very similar, growth on that total figure, but also importantly, 18 to 22% margin. So we can see some operating efficiency from Palantir. Then finally, looking ahead, as we can see, Q3, they're expecting some very strong numbers as well, 697 to 701 million. And for the full year, as we mentioned, they have increased their guidance of around 2.74 to 2.75 billion. And what is also great to see is that adjusted free cash flow growth as well, around the 800 to 1 billion mark. We're going to use that when we do come to our valuation for this company. As a quick reminder as well, we have just released our latest free weekly article. If you want access to this or any others, you can grab a copy by clicking on the pinned comment below. And within our articles, you can grab the August undervalued stocks, 35 of them, which we also talk about the ones that are included within our own portfolio and which ones we are looking to. Now let's take a look at some of the underlying metrics as well. The first one, the free cash flow. Remember, we want consistent growth over the longer term. Now we have noted it has gone from negative 10 cents to 32 cents positive. Always a good sign. It is increasing over the longer term, and that is anticipated to continue over the next 12 months. As we saw for the full year 2024, they're anticipating between 800 million to 1 billion in free cash flows. We then move on to sales growth. As we can clearly see, the growth story with Palantir continues, double-digit increases to the top line every single year, as well as on a trailing 12-month basis at 21%. And if you want to see it numerically, it has gone from 2018, 6 years ago, 600 million to 2.23 billion. One thing we always have to point out with these companies that are fast growing, they typically do tend to dilute your position as a shareholder over the longer term. So something just to be aware of. As always, we prefer it when companies do those share buybacks and return excess cash to investor pockets. Now, ROIC, very important for us on this channel. We want 10% or more. Give us faith, management are able to effectively allocate their capital. What we note, and this effectively means they haven't turned a profit until 2023 at 3%, trailing 12 month at 7%, so it is moving in the right direction, and we can see as well over the longer term this is directionally what we want to see, but do bear in mind that they have just recently turned a profit. Again, this will be shown in the operating margin, negative pretty much every year bar 2023, and when we just looked at their investor presentation, it is showing that the margins are starting to increase, so this is a very pivotal point for this company. And we can see free cash flow margin the last 3 years looking very strong. Remember, at a minimum we want to see that 5% level, so these are some very good metrics to see, and nice to note on a trailing 12-month basis as well, it is anticipated to continue. The net debt to EBITDA, then the earnings before the interest, tax, depreciation, amortization. This tells us the number of years it would take the company to pay off all of their debt net of cash on hand. 0 over the last 4 years, 0 over the next 12 months. It won't even take Palantir 1 day. This does show us a very strong balance sheet indeed. Now, a few other elements of our analysis. First one, looking at insider ownership, just under 13%, which is fairly high, and they've sold around 455 million worth of shares over the last year. Now, in the more recent period, Q3, 2.9 million worth of sales. We see some significant sales as well just over the last 2 quarters as well. So something to bear in mind there. It ultimately shouldn't affect your investment process given the fact that insider selling isn't a bearish signal. They sell for many reasons, whether it's personal or financial. The more recent one, just under a week ago, the 1st of August, we see the director sell over 3,000 shares, $80,000, so fairly trivial. Then we see the 18th and the 15th of July, some larger sales, 90,000 in fact, at around 2.6 million. As we said, if you want to include it, transparency is there, but ultimately not something we do think about. In terms of institutional ownership, well, 46%, 679 million worth of sales over the last 12 months. However, a lot more buying by the institutions over the last year, and we can see that also holds true for over the more recent period in Q2. And in fact, for quite some time, you would have to go quite some way before you see the opposite. In fact, Q1 of 2022. So ultimately, this does show us institutions do love this company. As always, whatever institutions or insiders do, always do your own due diligence and never focus on this in particular. Now we want to point you to the income statement. We did talk about the top line revenue growth. As we can see, strong growth, in fact, more than 3 times over the last few years, and that is moving in the right direction. However, our focus on this part of the analysis is on the bottom line, and we just want to show you that over the last few years, they weren't turning a profit until December 2023, so the latest annual accounts. And as we have just spoken about in their latest investor presentation, they do anticipate December 2024 full year accounts to show a nice profit larger than the previous year, so moving in that right direction, as we said, a pivotal moment for this company. We then want to take a look at the health of this company, total cash versus total debt. 1.1 billion in 2018, now sitting at just under 4 billion, so similar to their revenue, their cash is also increasing over the longer term. As always though, remember this number in isolation will not tell us anything about the balance sheet, which is why we do compare it to their total debt numerically and directionally, which went from 0 in 2018 to 259 million. So ultimately, as we discussed, their total debt in relation to their cash is very minimal, and it wouldn't even take this company one day to pay it all off net of cash on hand. Then we want to talk about their earnings, how well they've performed, as well as moving forwards. And we can see over the last 4 quarters, at a minimum, they have been in line with analyst targets, or if not, they have done better, as we can see that more recent quarter, a 1-cent beat. And over the next 4 quarters, very nice to note, they're anticipating double-digit increase to the earnings per share year on year. And ultimately, if management hit the EPS estimate in 2025, the forward P will come down to around 62. Again, this will depend on if you have that faith that they can hit those targets. So let's get into some underlying metrics and the gradings. The first one being the valuation, where they get an F. No surprises, the forward P is extremely high at 75. When we look at the sector as a whole at 22.3, it means you are paying a massive 236 premium on Palantir in relation to the sector as a whole, and that does hold true regardless of which valuation method you do take a look at. Something to bear in mind, but as always, it can be warranted and justified. For example, when we take a look at their growth, they do get an A. In relation to the sector, well, 21% on a historical year-on-year basis. Sector very low at 3.5. Revenue forward looking 20%, sector at just under 7, and ultimately when we do take a look at the earnings per share over the next 3 to 5 years, Palantir anticipated to increase that by 24%, whereas we have here the sector median at around 14.5. So they are performing a lot better in the growth department, and we can also see that hold very true for profitability, where they get an A-. Gross profit margin, nice to note, very high, 81%, sector as a whole at 49%. When we look at the bottom line net income margin, 16 versus the sector at 3. And when we take a look at cash from operations, looking very healthy, 708 million versus the sector's 98.42. So a summary for this part of analysis, a buy from Seeking Alpha, we actually get a double hold from Wall Street and Quant, an F on valuation, A on growth, and an A- on profitability. Now, how have they performed against others in a similar sector and similar size? Where you have here, as you can see, Workday, Roper Technologies, as well as a few others. What we note then over the last year, that Palantir is the best performing, up 48%. And when we expand this over the last 3 years, they are the second best, up around 22%. Remember, past performance is never an indicator of the future, just something we like to incorporate in this piece. Now we're going to show you just their performance against the S&P, but over the last year, S&P has been outperformed by Palantir, up 48 versus 16. And when we expand it over the last 3 years, we can see marginal outperformance by Palantir. Now in reality, this won't tell us much right now, but what we always want to remind you is whether or not you see this company outperforming the S&P over the longer term, as there are some very good alternatives like Vo if you don't have that confidence. So let's jump into the valuation model. As always, if you do enjoy the content, value is being provided, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Now our intrinsic value at $32, how we arrived at that, we run it through the DCF model. Now we have the average growth, -146, but as you can see, lots of skew going from positive to negative. Just the more recent year, 280%. We've gone for a growth rate of around 25% moving forwards, which we actually believe to be fairly conservative, but we can see here a low, medium, and high. Now at 25% with a discount rate of 8%, we get the present value of future free cash flows and terminal value. We add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and we can see that intrinsic value of $32. Now this implies upside of 19%, and as always, a lot of people will say this is subjective. They will be more conservative or optimistic. So for those that believe a lower number is more appropriate, at 20% we can pretty much see the intrinsic value sits at $24. For those that believe it should be a lot higher, well, at 30% we can see 42 with upside of 58%. Now bear in mind, you can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for Palantir or any others. So we're going to go through with the 25% growth rate, and we do get that 3168. And what we always do on this channel is at a MOS level. Now 10% is what we use and execute on if it does meet our 3 golden criteria: a wide moat, strong financial metrics, and good forward-looking data. Well, if you believe that, a buy up to $28.51, then we keep going till it's near the current trading price. Now it isn't at a 20% just yet, it sits at around 15 to 20, up to around $27. We do know Wall Street though, they are bullish on this. They have upside of 32%, their price target $35, although some individual analysts do see this going as high over the next year as $40, $45. Now, a lot of talk about this company being a $1 trillion company, and we've just wanted to show you that at the price of around $23, this company has a market cap of $50 billion. So for it to achieve a $1 trillion status, the market price would be around $460, which does show a lot of growth if this is what you truly believe in over the longer term. Now, whilst our price has intrinsic value of $32, do remember that this is based off the growth rate of 25%, and some of the numbers that they have produced just in their latest presentation does make me believe that this number could be a lot higher, and this company could be worth a significant amount over just the next 3 to 5 years. As always though, do give me your thoughts below. Are you a Palantir shareholder? Was this a very strong report? Maybe you're actually starting to buy, or maybe it's on the watch list as you do believe this will come down lower. As always, if you enjoyed today's episode, smash that like button, hit that subscribe and bell button, let us know your thoughts below. Don't forget to join the free weekly newsletter by clicking on the pinned comment below and signing up to the Patreon if you do want to discuss our weekly buys and sells. As always, have a great day and see you all on the next one.